We'll open with statements by the Director General, Ngozi Okonjo-Iweala, and Mark Paqueta, co-director in charge of economic research. Also on the podium with the DG and Mark are, to my immediate two left spaces over, Coleman Nee, Chief of Section for Forecasting, Barbara Andrea Adrian, Chief of Section, International Trade Statistics, and at the far end from me, Eddie Beckers, Chief Modeler for Quantitative Economic Research. After the opening statements by the DG and Mark, we'll take some questions from journalists. Just to note that the Director General has to attend the General Council meeting, which is continuing after the lunch break, so she will have to leave a little bit early, but she will take some time to take your questions, and our economists will be staying to take other questions you have. So, Director General, the floor is yours.
Okay, thank you, Dan, and good afternoon, everyone. Welcome to this update. We are here today to share key insights from our latest Global Trade Outlook and Statistics Report for October, which provides an update on the outlook for world trade in 2025 and 2026. As you know, since the start of the year, we have seen unilateral actions by one of our most important members and an unprecedented rise in trade policy uncertainty. Despite the stiff headwinds, trade has shown resilience, thanks in no small part to the stability provided by the rules-based multilateral trading system and members' measured response to tariff changes. World merchandise trade volume growth came in stronger than expected in the first half of 2025, up 4.9% year-on-year. We now expect world merchandise trade volumes to expand by 2.4% this year. This is well above the 0.9% we projected in August, let alone the 0.2% contraction we were expecting in April, before several U.S. tariff measures were postponed, de-escalated, or met with limited retaliation. Now, what is driving this increase? First, importers front-loading orders to get ahead of future tariff hikes or retaliation. Inventories in the U.S. are at record levels by dollar value. In the first quarter, the value of North America's imports surged 13.2% year-on-year, driven by pharmaceuticals and precious metals, mostly gold. Second, soaring demand for heavily traded AI-related products like semiconductors, computers, servers, and manufacturing equipment to feed the ongoing boom in AI-related capital investment. In the first half of the year, 42% of global trade growth came from AI-related goods, far out of proportion to their 15% share in world trade. Third, trade continued to grow among the rest of the world, particularly South-South trade, as members mostly continue to trade with each other normally. Supply chains are going where the demand is. The report focuses on our standard regional groupings, but our back-of-the-envelope calculations suggest that South-South trade grew 8% year-on-year in value terms in the first half of 2025, compared to 6% for world trade overall. Our very rough estimates suggest South-South trade involving partners other than China is growing even faster, up around 9%. With respect to services trade, which continues to outpace trade in goods, the new report projects 4.6% growth in 2025 in volume terms. This is up slightly from our April estimates, but still below the baseline forecast from the start of the year. Services trade is not directly subject to tariffs, but it is indirectly affected by the tariffs through slower GDP growth and reduced demand for things like transport and tourism. AI is making its presence felt here too, bolstering demand for computer services. None of this, however, affords us room for complacency. Tariff measures are weighing on trade, even though front-loading and the suspension of many duty hikes between April and August have pushed their effects back into the latter part of this year and especially into next year. Shifting trade patterns reflect new opportunities, but are also creating new stresses. We know that U.S.-China trade contracted by 19% year-on-year between January and July, according to U.S. Census data. There are initial signs that at least some of this trade is going to other markets. We are monitoring the situation in the event of any member concerns and urging WTO members to address any domestic dislocations they feel by using the standard trade remedy measures already available in the WTO toolkit. Looking to 2026, the fact is there's so much uncertainty, it's hard to be conclusive. Upside risks come from strong AI-driven growth and trade, or policy changes like tariff reductions. Downside risks come from spreading trade policy uncertainty and trade barriers. For now, we expect merchandise trade to grow just 0.5% in 2026 in volume terms. The two-year cumulative increase for 2025 and 2026 is 2.9%, not much stronger than the 2.3% projected in April. In conclusion, the resilience of trade underscores that there is a core in the multilateral trading system that continues to work well. Though this share may yet dip more, approximately 72% of global merchandise trade is still governed by core WTO, MFN, most favored nation tariff terms. This may dip, but this is the number we have for now. And the stability of the system goes well beyond tariffs. Companies and consumers benefit every day from WTO agreements in areas like health and safety standards, customs valuation, and intellectual property, which set out shared rules and practices that enable value chains to function smoothly. The WTO can play an even more significant role in reducing downside risks and boosting the upside risks, for instance, by developing new tools to address level playing field issues or by fostering more coordination of digital trade policies. That is why we need to deliver on WTO reform. For the sake of growth, development, and employment prospects across the WTO membership, we must sustain what is working well, but we must also reform what is not working. And we must reposition our organization to better support members to take advantage of exciting new trade opportunities, not least in the digital economy. The new trade data are just the latest sign that AI is no longer an emerging issue on the horizon. It has arrived with very important implications for trade, as underscored in our recently released World Trade Report. I know you've all seen this, but in case you haven't, we're very proud of this report, making trade and AI work together to the benefit of all. We are committed to harnessing the potential of AI to forge a future in which the benefits of both trade and technological progress are widely shared across and within members. Thank you.
Thank you, DG. I'd now like to hand it over to Mark for his opening remarks.
Thank you all for coming or for listening in, and thanks to Dr. Ngozi for providing a succinct overview of the revised trade outlook. Rather than reiterate the same points, I would like to take this opportunity to share some details of the forecast and draw your attention to some noteworthy developments in trade statistics for the first half of 2025. Forecasting trade has been especially challenging this year, given the unprecedented size and scope of policy shifts and policy uncertainty. Where once there was a promising outlook for steady trade expansion in 2025 and 2026, we were suddenly confronted with a different reality, where changing tariffs were poised to significantly alter global trade flows. To address this challenge, we adopted a dual approach. First, we produced a baseline forecast, which was a straightforward projection, not explicitly accounting for the influence of new policy measures. And second, we introduced adjustments using policy simulations from our global trade model to incorporate the impact of higher tariffs and trade policy uncertainty. Back in April, when we issued our last GTOS report, this approach gave a forecast where merchandise trade was expected to be nearly flat or even contract slightly in 2025 before picking up in 2026. Since then, new tariff measures were postponed and US trade agreements were negotiated, delaying the direct impact of tariffs until the second half of this year and into next year. The end result in our current forecast is stronger trade growth in 2025 and weaker expansion in 2026. It's worth noting that the current forecast is 2.9%, which is only slightly more optimistic than the two-year increase of 2.3% reported in our April forecast. This is illustrated in chart 1 on page 1 of the report. Of course, we do not have a crystal ball, and these estimates, for 2026 especially, depend on a variety of assumptions that could change. The tariffs still have a significant effect. It is just the timing that has changed. Turning to the regional dimension of the forecast, Asia is expected to record the fastest export growth of any region in 2025 at 5.3%, followed closely by Africa, also at 5.3%. Next will be South America at 2.4%, the Middle East at 2.2%, and Europe at 0.7%. The CIS region's exports should contract by 0.7%, while North America's are expected to fall 3.1% as year-on-year growth slows in the second half. On the import side, Africa is expected to see a sharp increase of 11.8% this year, followed by South America at 8.8%, Asia at 5.7%, the Middle East at 3.7%, the CIS region at 2.7%, and Europe at 2.4%. North American imports should contract by 4.9% in line with the region's exports. Finally, exports of least developed countries should increase by 6.1% in 2025, while imports should jump 13.5% in 2025. In addition to the usual descriptive statistics on recent merchandise and services trade developments, the current GTOS report takes a deeper dive into the recent surge in AI-related products trade. The report finds that trade in AI-related goods was a key driver of the strong growth in the first half of 2025, with trade in these products rising 20% year-on-year in value terms, accounting for nearly half of year-on-year increase at the global level, despite representing less than 10% of total merchandise trade. The rise in AI-related trade seems to have been fueled by structural investments in digital infrastructure, from semiconductors to cloud servers. In contrast to AI products, there was much more stability in non-AI goods, which grew by less than 4% year-on-year over the same period. Regional contributions in AI-related goods trade have also varied. On the import side, North America stood out as semiconductor imports rose 36%. However, the bulk of expansion in AI-related trade came from Asia, which accounted for nearly two-thirds of total AI-related trade growth in the first half of 2025. The launch of the GTOS coincides with the release of our latest quarterly and revised annual trade statistics, which can all be downloaded from the WTO's website. The WTO has also launched a new tool to analyze monthly bilateral trade data for over 120 economies and 200 trading partners. The data, sourced from Trade Data Monitor, TDM, and updated weekly, cover the period from 2018 to the most recent available data for each economy. It's aggregated into quarterly and year-to-date views to provide short-term insights through total trade flows, growth rates, and shares by multilateral trade negotiations categories and partner for selected economies. This will provide a valuable service to trade analysts and the general public. The monthly trade statistic dashboard can be accessed at an address which, unfortunately, well, I can read it, but I don't think it's going to be
provide that to everyone
that we will provide, yeah. Sorry about that.
Great, thank you very much, Mark. We now have about 25 to 30 minutes for questions, and I'll open the floor to questions from journalists. I'll start with questions in the room before moving online. When asking your questions, please turn on your microphone, and please identify yourself and the name of your media. Also indicate to whom your question is addressed. We'll start with Laurent to begin.
Laurent Siro, Swiss News Agency. DG, thanks for the press conference. So the outlook for next year seems bleaker than expected. And when we look at the recent weeks where the US administration started again with its tactics of threatening with the tariffs on drugs and then negotiated case by case. So you said for now the system is resilient, but how concerned are you for that resilience of the system next year? It's going to be an important year for the WTO as there will be the ministerial conference. And briefly on the figures, so if we look at the figures for the North America, it seems that the contraction for exports is lower than the contraction for imports. So would you say that the bet of President Trump has been won to rebalance trade with the other stakeholders, or that the bet has been lost because of the detrimental effects for the US consumers?
Contraction, regional trade numbers. The outlook for next year is bleaker, yes, and how concerned I am, very. I am concerned for the system. You saw what I said in my statement, that this is no time for complacency. Just because we see resilience in the system doesn't mean that we're home free, because there's so much uncertainty. And that's why we've also been very upfront with you that it's very difficult to forecast. Because we have these ups and downs with regard to trade policy uncertainty. So I am concerned, and it is precisely because I'm concerned that we maintain the resilience. That's why we're insisting on the reforms, because we feel that the reforms will help to support and strengthen what is working in the system, which is obviously quite a great deal, according to the numbers, but also then help us, sort of buttress this resilience. I think the reforms, and you mentioned MC14, yes, I think it's all feeding into the same thing, that at MC14, we must have a hard focus on having ministers drive these reforms.
Thanks for the question. I think this is very much a short-run effect, so an effect over 2 years. And also this is the effect focused on merchandise trade. So if you would take merchandise and services together, the picture for imports and exports would be more balanced. And furthermore, related to the short-run effect, what we see is that the dollar actually hasn't appreciated as one would expect with tariffs increases. But especially in real terms, this is still expected as the impact of tariffs is starting to kick in. We expect to also see an adjustment on the export side. However, as the analytical chapter is analyzing, it is very difficult to foresee what the exact impact is of tariffs on trade imbalances. The economic science is not conclusive on this.
I'd just point out for the year to date, in the first half of the year, the U.S. merchandise trade deficit has widened, and in currency terms. Now these forecasts are in volume terms, which are not really exactly translating into trade balances.
Okay, thank you, Laurent. I'd just like to remind everybody that we do have interpretation in French, Spanish, and English. So you are free to ask your questions in those languages. I will now turn to Christiane. Unfortunately, we don't have in German, but we'll ask you to speak in one of the other official languages.
Dankeschön. It's Christiana with the German Press Agency, and my question is also to the DG. I wanted to open the lens wider beyond the trade forecast. One member of the international community doesn't seem to play by the rules anymore, and it doesn't seem to make a difference because WTO cannot do anything about it, because we all know the DSP process has been disrupted by that very same member. What does it say about the relevance of the WTO if not any member, but the biggest member with one of the biggest economies in the world can play without adhering to the rules? Are you just holding your breath and hope this will go over, or do you see a role for the WTO to somehow rein this in? And you always insist, sorry to go on, you always insist on reforms like a lot of the members do. Do you see any room where these members are seriously engaging in reform? Thank you.
But I don't need to belabor the issue. The numbers speak for themselves. So if under all this stress that the system has been going, the greatest disruption in 80 years, which we do not minimize, we calculate the numbers, and we've been doing these calculations on MFN forever. We haven't changed the methodology. And it shows that 3/4 of world trade in goods is still going on WTO terms. Then that tells you something, doesn't it? It tells you that there's a great resiliency. That's what we're saying. So it's not me trying to say whether the WTO is relevant or not. Businesses, you know what the shipping companies told me when they came here to see me? They said, we've reconfigured our shipping supply chains because we are following demand. So what we see in these numbers is that resiliency, which I myself said to our team, you have to sit down, because I thought it would be much lower, to be honest. So I wanted to know, as an economist, chapter and verse, what is behind this? Because it should be lower. And we went through, and it is the system, we are getting this core thing because the rest of the members have not done a tit for tat like it was in the 1930s. They've continued to trade with each other on normal WTO terms. They've not even done a tit for tat with the US, barring maybe 1 or 2 members. So members, that shows me how much they value the rules. They're respecting the rules. They're playing outside of US trade. So yes, we accept US trade is not MFN and things are not what, but the rest of the membership is doing that. The second thing is that trade is shifting elsewhere. And you saw what I said. South-South trade is moving. You know, trade with the rest of the world is trading with itself. And then lastly, we've seen this boom in AI trade following the capital investments, which we see escalating. We just saw some numbers, the 1 trillion in terms of investments by not ChatGPT, what is it? Not XAI, what's AI? NVIDIA, sorry, and the rest of them are all investing in each other. So I think that there's no question about the WTO's relevance whatsoever, okay, in that sense, that the numbers are showing the system is stable, it's working, and so on. But is the system disrupted? The answer is absolutely. It is disrupted. And that's why I said we cannot be complacent. And even when we see that 72% of world trade is going on, we've now got 2.4% in terms of trade volume growth in the year. But we have to be concerned. And that's the point you're saying, that we must watch out. And that's why I keep saying, harping on the reforms, and saying we must do the reforms. We cannot just sit still and take this system for granted. And we know what those things are, so that the WTO can be more flexible, more relevant, you know, and members can be encouraged to stick with the system and not take unilateral action. Where you have to sort of listen to the US, I always say this is, yes, they took unilateral action, you may not like it, but what are the criticisms? How did we get here? Why did we arrive where we arrived? And some of the criticisms they level at the system are valid. And they're not the only ones who have criticisms. You know, other members have criticisms, including developing countries. That's why the reform is so important. This is the time for everyone to put their concerns on the table and for us to do it. And by the way, on the dispute settlement system, there's this kind of feeling that, you know, it's paralyzed and nothing is working. I just want to use this opportunity to correct that, okay? The upper body, the appellate body of the system, as you rightly noted, is paralyzed. But the rest of the system is working, okay? And members have been exceedingly creative in how they handle appellate issues. So right now, I think it's 15 ongoing cases before the body. We can get you the numbers. Many more cases since 2019, when the appellate body was closed. Members are still bringing cases. before the dispute settlement system. And by the way, after the panel rulings, they are finding creative ways, like through the MPIA, which Europe and others should be praised for putting in place. They are going for arbitration. They are going for mediation. Even the DG's good offices to try and help settle some issues. There are a number of ways the dispute settlement understanding has given avenues, and they're using this. So the system is not exactly paralyzed the way that people think.
Thanks, DG. So we'll continue in the room. I know we have a few more questions. Agnes from AFP.
Oh, hold on. She asked me a question about, do I think members are serious about reforms? Actually, we are. That's one of the things on the agenda of the General Council is about reforms. And what is appearing to me is that, yes, these reforms we are talking about are not like before. You know, if you look at most of our ministerial statements or outcomes, members talk about doing reform. This time, there's a clear recognition that this time is different. Some are calling it deep reforms, some are calling it repositioning of the system. Whatever you want to call it, there's a clear recognition we need to take care of those things that are impeding the WTO from working as well as it should. So it's working, but it's not working as well as it should. It should be more fast, flexible, deliver more agreements, and also be fit for purpose to tackle new issues like digital trade. So members are discussing this. Now, in the discussion, of course, you see quite some divergence of views. Everyone agrees on reform, but what they think should be reformed might be different. You know, their priorities and their approach. They are looking at it from their national viewpoint. Okay, this is what matters to me. And that's not really unusual. So we have divergences. But what is evident is that we've moved. There's an acceptance we have to do this reform, how we do it, and what's the priority, and what you think matters to me much, or what I see as reform may not be what you see. The task now is for Ambassador Alberg to try and pull all these strands together into something that members can agree to, that okay, we all have our differences, but clearly we have some convergences in these items, and this is what we are going to work on and take to ministers. Thank you.
Thanks, DG. Christiane? I'm sorry, Agnes. Agnes, it's you. Christiane had her bite at the apple already.
Okay, thank you. Agnès Pedrero from AFP. You mentioned the fact that the trade between South-South is strong, and I was wondering if you think that it could be even strong enough to compensate next year the effect of the US tariffs. How much those countries should reinforce their trade to compensate that, and which countries are the one leading that trend? Thank you.
I'll just comment, and then maybe my colleagues can add. We've certainly seen South-South trade grow from about 10% in 1995 to 25% now, or less than 10% then too. So clearly something is moving, and there's a shift. I can't say, I think it's premature to pronounce whether that growth that we've seen this year will continue or be strong enough to compensate for what happens next year. But we do see a pattern of emerging free trade agreements, bilateral agreements, regional agreements of members increasingly reaching out both rich and poor countries to each other to make these agreements to boost trade. So for that reason, I think we will see better activity. And we support it, by the way. We don't regard this as a parallel system to WTO. No. If you look at most of these FTAs, RTAs, they are based on a WTO platform of rules. That's another reason why we see very strong resilience in the system. We have a whole unit here whose job is to follow all these agreements as they come in and study the basis and tell us. So they are more or less, most of them, built on a WTO basic platform, although they may have provisions that are more adventurous or whatever. So we welcome those because we think that the system, there's a need for more diversification of trade and more diversification of supply chains. We actually support that. We think the system was built for interdependence. And one of the criticisms that we notice, and I accept, is increasing overdependence in this system. As I've said elsewhere, overdependence on US for markets, overdependence on China for critical supplies, even overdependence on certain countries like Chinese Taipei for a product like semiconductors, where 90% of the world's semiconductors are made in one country. So we need to shift and diversify. So if that also boosts South-South trade, as it should, then we're good with it. But I can't tell you exactly by how much. We actually call it reglobalization. We have a word for it at the WTO.
Anyone else want to jump in on that?
I would just like to point out that we don't have a forecast for South-South trade, but if you look at some of the developing regions in our forecast, particularly in terms of import demand, for instance, Asia, which is mixed, it's a mixture of developed and developing, but it's growing 2.7% next year, which is above the forecasted world average of 0.5. Middle East is 1.8, but that's also above the global average. Africa is at 5.4% above the global average. So developing regions seem to be, even though all regions are slowing next year, we do see resilience in developing countries.
Thanks.
Sorry, can I?
Yeah, unfortunately, the Director General will have to leave now because she has her General Counsel to endure. So, yes,
Don't let members hear that. Okay, thank you.
that was off the record, everyone.
Thank you
Yes.
to all of you, and good luck.
Thanks, DG. We'll continue now. I thought I saw a hand to my left here. Yes, Assis Moreira, you have the floor.
Well, I had another question, but I'll take this opportunity. Mr. Colemani, you said the developing countries are exporting and importing more, but concerning Latin America, for example, we see that there is a contraction for next year. How can you explain that in export and imports for South America? It's contraction next year.
For South America, we have, on the import side, we do have, well, part of it is the strength of the exports in the previous 2 years. So, imports rather. So we see 6% growth in 2024, 8.8% growth in 2025. And so there's a kind of a correction, a reversion to the long-run trend. But also there's different regions are affected differently by the tariffs, and perhaps Eddie would like to chime in on specifically on the impact of the tariffs. And exports. Sorry? Exports. And exports as well. So this is once again there's a there was strong growth last year, 6.2%, and 2.4% this year, and then there's a kind of tendency for trade to revert to its mean, and then beyond that we have the impact of our simulations, which
I think Coleman pointed out everything. So there's a base effect, and then on the export side, South America is also impacted by the tariffs because their trade share with the U.S. tends to be above average compared to other regions. So that plays a role. South America. Yeah. South America. Yes.
Microphone, please.
South America, the biggest trade is not with U.S., it's with China.
Yeah.
South America is mainly Brazil. It's
So I was, just to qualify, I was talking from the perspective of the U.S., of the import side. So indeed, South America trades a lot both with Asia and with North America. But if you look at it from the perspective of North America, then you tend to see that there is a larger import share. Or how should I phrase it? A larger share is exported from South America to North America than for many other regions.
Thank you. I'm going to start to take some questions online. Before I do that, I'd just like to introduce Deputy Director General Joanna Hill to the podium. welcome DDG Hill. She is the one who oversees the Economic Research and Statistics Division, the division responsible for producing this report. We'll go online now. I see a hand raised, Olivia from Reuters. Olivia, do you want to unmute and ask your question? We ask everyone at the podium to put their earpiece in so you can hear Olivia's question.
Hi, good afternoon. Thank you very much, everybody, for this briefing on the report. I was just wondering if you could spell out to us what this downgrading of the forecast to 0.5% growth next year means in the context to previous years. I mean, Ngozi there said, the Director General, that she is concerned, but perhaps you can just give a little bit more context about where that figure falls in comparison to previous years. I mean, how bad is that figure, and what could be some of the things that might help mitigate the impact of that forecast going into next year?
I'll start with this. There is kind of a basic trend in underlying trade growth, which has strengthened in part because of the strong first half developments this year. So we're starting from a higher base, and so that would tend to result in slower growth. We also have some major markets like the United States with the tariffs. It would be the tariff impact as well. And then also slowing imports in Asia and China. So these are important markets that are slowing down, but the underlying trend is still relatively stable. As Dr. Ngozi and Mark Paqueta mentioned, there's actually been a slight improvement over the two-year average between 2025 and 2026 in the current forecast than compared to the spring.
Thank you, Coleman. We're going to take one more question online and we'll come back to the room. And I'll ask Brendan Murray from Bloomberg to take the microphone. Brendan?
Yeah, hi. Can you hear me okay?
We can, Brendan.
I wonder if you could talk about what the models that you're looking at would show if the U.S. tariffs are affirmed to be illegal, and those reciprocal tariffs that are in place country by country go away. Would your forecast for 2026 change all that much, or is it your understanding that the U.S. has, or the executive branch in the U.S. has authority to impose, a similar degree of a scope of tariffs?
At the Secretariat, we don't really evaluate measures in that way. But I do think we had a forecast for 2026 without any tariffs at the beginning of the year, right? And last year?
Yes. Yes. So I think the projection pre-tariffs for 26 in April was 2.9%. Of course, I think it's speculation, as the DDG indicates. It's a very much a what-if question, because we don't know exactly what kind of trade policies would come in place. So I think therefore this is difficult to answer.
Thank you. We'll go back into the room. Peter Kenny, you had a question.
Trade in Africa is expected to grow, I think you said 5.4%, which is fairly good on the scale of things. Is this trade coming from any one particular region, or is it across the board in Africa? Can you specify where the trade is taking place and with whom? Thank you.
I can't really specify exactly. We just, I don't have a breakdown of the forecast by individual African countries. But we have looked into some of these drivers of AI trade, and also the possibility of trade diversion. On the import side, there's a lot of import growth in Africa, and a lot of this is coming in the form of heavy machinery, things like mining equipment, things that are capital investments that should boost Africa's productivity and eventually boost their exports. And there's also a lot of heavy investment in electronics, and on the consumer end, there's consumption of imported vehicles increasingly from China. So the heavy investment in shipping, in heavy machinery related to mining in particular should boost exports going forward.
And we already have 6.3 increase.
Oh, yeah. Oh, and sorry, we already have
6.3 increase.
a 6.3% increase in African exports in volume terms in the first half of this year. So there's sort of a underlying strength there, that since it's so high, there may be some reversion to the mean like these other regions, but overall, its export prospects look fairly good. So.
Thank you, Coleman. Time is running out. I see 2 hands that are raised online. I don't see any other hands in the room, so we'll take those final 2 questions. The first one goes to Joseph from the Observer Media. Joseph, you have the microphone. I don't see Joseph taking the microphone. We'll go back to you, Joseph, if we have a chance. In the meantime, we'll take a question online again from Priti. Priti, you have the microphone. Please introduce yourself.
Hi, this is Preeti Patnaik from Geneva Health Files. I wanted to know whether you were able to comment on the impact specifically on pharmaceutical supply chains going forward, not only in the context of impending potential pharma tariffs, but over and above what we have observed in the last 6 months. How do you see this going forward? A little bit connected to the question posed earlier on South-South trade, whether we are actually seeing a shift in the way supply chains will be geared away from the US and towards other countries. Thank you.
Okay. I don't have any particular, specific forecasts for pharmaceuticals. I can say that in the case of the United States, there was a lot of precautionary imports, particularly in the first quarter. So you saw a really strong spike in U.S. imports of pharmaceuticals. And in the second quarter, it's kind of reverted to previous levels. So there may be a slower growth in imports in the United States going forward because of these accumulated inventories, which will have to maybe result in weaker imports going forward. But eventually, those supplies will be used up, and there will be maybe a reversion to the previous levels, depending on the level of tariffs. But it takes time for production supply chains in pharmaceuticals and other sectors to reconfigure, and in the short run, countries will continue to import from established suppliers.
Yeah, please go ahead.
Yeah, no, thank you. I think I would just like to draw your attention to this new tool. Precisely, you will be able to access the latest monthly statistics on U.S. and other countries, of course, that are reporting this information to them on pharmaceutical through July. And just getting back to your question, we have already minus 22% in the imports of the U.S. in pharmaceutical products in year-on-year basis.
Mm-hmm.
So maybe
but down from a spike of
it's trending downwards. I mean, since a spike that was recorded early in the year of more than 100% in March.
Mm-hmm.
So it's trending downwards.
Okay, thank you both. Let's try Joseph one more time, otherwise we'll wrap up this briefing. Joseph, are you there online?
Yes, I am.
Hello? Good to hear from you.
Yes, good afternoon.
Good afternoon. We hear you, Joseph.
Thank you so much. Rising trade policy uncertainty and tariffs are dealing a blow to the global trade looks, with least developing countries hard hit, like Uganda, with the impact. Just wondering, what would you foresee a future of the global trade to be if this trade policy shifts persist? Thank you.
Thank you, Joseph.
Yeah,
take that.
I think one thing that is interesting is that in our April outlook, we introduced also in the special chapter a scenario where trade policy uncertainty would spread, and that would have a particularly negative impact on trade in developing economies also. And what we have seen so far is that the trade policy uncertainty has not spread across all regions in the global economy. And so I think we can be optimistic or we can be positive on this compared to this downside risk scenario that we analyzed in April.
And then also there's some upside potential if this investment in AI-related technology causes a increase in productivity globally, which could drive stronger economic growth and lead to higher than upside potential to our forecast.
So I think with that, we will wrap up this press conference. We're running out of time. I'd like to thank the Director General, who's also here, EDG Hill, Mark, Coleman, Barbara, and Eddie for being with us today. And thanks to you, the journalists, for your participation. And I'd also like to thank the interpreters for their help, as always.